Today, we're breaking down Smith & Wesson's latest earnings call, and let me tell you, there are some seriously impressive numbers hidden in this report. Whether you're an investor, industry watcher, or just curious about one of America's most iconic firearms brands, you're going to want to stick around. We're counting down the top 10 takeaways from their Q2 fiscal 2026 results, starting at number 10 and building to the most important insight at number 1. Let's dive in. Coming in at number 10, Smith & Wesson is projecting strong Q4 growth. Management expects high single-digit to low double-digit growth in Q4 compared to Q3, which is traditionally their strongest quarter of the year. This confidence in their busiest season shows they're positioned well for continued momentum. At number 9, new products are absolutely dominating their sales mix. Nearly 40% of Q2 sales came from new product launches, which is remarkable. This shows their innovation strategy is resonating with consumers and keeping the brand fresh in a competitive market. Number 8 brings us exciting news about their new Smith Wesson Academy. The facility opened on September 12th and is already hosting law enforcement customers and consumer training classes. Led by a retired Navy SEAL from Elite SEAL Team 6, the Academy has received overwhelmingly positive feedback in its first 2 months. At number 7, we see impressive cash generation capabilities. The company generated over $27 million in operating cash flow during Q2, a massive swing from using cash a year ago. This demonstrates excellent operational discipline and working capital management. Number 6 highlights their inventory optimization success. Inventory dropped to $183 million from $203 million in Q1 and $196 million year over year. Channel inventory at distributors also declined over 5% sequentially and 15% year over year, positioning them perfectly for the busy second half. Coming in at number 5, Smith & Wesson maintains strong pricing power. Average selling prices increased 3.5% overall, with handguns up 2.1% to $418 and long guns jumping 10.2% to $602. In a promotional environment, maintaining pricing shows real brand strength. At number 4, the company is gaining significant market share. After adjusting for channel inventory, their handgun sell-through at retail was up 7.7%, while the broader market grew only 2.9%. Total firearm shipments were up 3.3% versus the market being down 2.7%, demonstrating clear outperformance. Number 3 reveals margin improvement on the horizon. Management expects Q3 gross margins to increase by a few percentage points both sequentially and year over year, driven by increased production absorption and additional operating days. This should help offset any tariff headwinds. At number 2, we have strong Q3 revenue guidance. The company expects third-quarter sales to be 8% to 10% above prior year Q3, with no significant channel inventory impacts. This suggests genuine consumer demand is driving the growth. And finally, at number 1, the most important takeaway is their solid Q2 operational performance. Despite revenue being down slightly, Smith & Wesson delivered $15 million in EBITDAs on nearly $125 million in sales. This demonstrates operational efficiency, disciplined cost management, and the ability to maintain profitability even in a challenging environment. Combined with their strong balance sheet, innovation pipeline, and market share gains, this foundation positions them exceptionally well for the future. So there you have it, the top 10 takeaways from Smith & Wesson's earnings call. The company is firing on all cylinders with new products driving growth, market share expanding, and cash generation strong. If you found this breakdown valuable, hit that like button and subscribe for more earnings analysis. Drop a comment below with your thoughts on Smith & Wesson's performance. Thanks for watching, and I'll see you in the next one.